Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. Today we will be discussing in this chapter the provisions relating to collection and recovery of tax. You see the whole procedure of, you see the whole concept of, the whole theme of taxation revolves around that some income is earned by the assessee. Assessee earns some income, and then according to according to the applicable rules, according to the applicable form, the assessee is required to file the return of income, and then that is filed and assessment is done. So ultimate objective, what is the ultimate objective? You see, ultimate objective of the whole procedure is to collect tax. The government is basically interested in, as we already know, that collection of tax, and ultimately collection. Ultimately, government need funds. Government needs funds for the purpose of various developmental activities, as we have discussed in so many videos earlier also. That money is required for various infrastructural development activities, for various other developmental activities. Government need funds. And what is the fun of that? In case assessment is made, in case everything is done, but ultimately government is unable to collect the money, so collection of money is required. And in case it is not collected in a smooth way, and assessee is not paying, you may say, in a proper way, then in that case, even after a reminder, even after notice, you may say that assessee is not paying the amount, the required amount, the payable amount to the government. In that case, various modes are there for the recovery of tax. So in this video, we are basically concerned with what are the procedures relating to collection and recovery of tax. So now let us start. First, so we are concerned with collection and recovery of tax. Now, what is the first step? What is the first step? So it should be noticed that first of all, it should be noticed that in any case, in case we find that some tax, some interest, some penalty, some fine, or any other sum is payable in consequence of any order which has been passed as per the applicable provisions of the Income Tax Act 1961, then it is a duty, it becomes the duty of the assessing officer to send a notice of demand, and in which, in that notice, the amount, the sum, the amount recoverable from the assessee will be mentioned. It will be specified in that notice. So it is a duty of the assessing officer to issue some notice in this regard. So it is clear, I have already told you, this notice will be covering each and everything regarding the amount payable or amount recoverable from the assessee. It may be relating to, it may relate to, as you know, any tax, any interest, any penalty, any fine, or some other sum, some other amount that is recoverable from the assessee. And the prescribed form, as you know, that notice should be sent to the assessee in the prescribed form, which is basically form number 7. So it should be sent in form 7. So it should be kept in mind. Now, one thing more you should remember, that whenever something is asked, whenever some notice is sent by the assessing officer, then in that case some time period is given. Some time period is given to pay the required amount. So similarly in this notice that is issued under, I have already told you, under section 156 of the Income Tax Act of 1961, it should be generally 30 days are given, 30 days counted from the service of the notice to the assessee. So it should be noticed that uh, the amount that has been specified, the amount that has been mentioned in the notice, it must be paid within 30 days from the service of the notice. But one thing you should know that I am telling you the general provision, simple in routine, that is the time period. But now suppose in case the assessing officer believes, he has sufficient reason to believe that in case the full period of 30 days is given to the assessee, then in that case it may be against the, it may be detrimental to the interest of the revenue, interest of the government. Sufficient reasons may be there. Actually, he may get some hint, he may get some, you may say, hint that assessee may not pay, assessee might be leaving India or something like that sort may be there. In that case, what he can do, he can even send a notice. He can even send a notice regarding for some, you may say, a notice maybe for a period less than 30 days. Even that will be sufficient. But one thing you should remember, dear students, that in for doing that, he has to get the prior approval of the Joint Commissioner of Income Tax. Joint Commissioner of Income Tax. The permission of Joint Commissioner of Income Tax is needed to issue a notice in when the assessee is required to pay the amount less than 30 days from the service of the notice. Otherwise, in order to issue the notice of 30 days, then in that case there is no need to get prior approval from the Joint Commissioner. But one thing more is there. Again, when you see, when some application is made by the assessee and uh, he personally requests the concerned assessing officer to extend this period. That is, 30 days period is already there, and when an extension is sought by the assessee from the assessing officer, then it is also possible. But as in order to reduce the time period, permission of a joint commissioner was needed. Similarly, in this case, in order to extend the time period for a period more than 30 days, then in that case, approval of the principal chief commissioner of income tax is required. So these things must be kept in mind. So the summary is, in order to reduce the time period, in case the assessing officer feels that it may be detrimental to the interest of the revenue, in case the full time period of 30 days is given, in that case time period may be reduced, but permission from joint commissioner will be needed. Similarly, in order to extend the time period, in order to extend, which is also possible, but in order to do that, prior approval of principal chief commissioner of income tax will be needed, and it will be done on an application received from the assessee. So it must be noted. Now, kindly note who is assessee in default. Who is the assessee in default? Now, you should keep in mind that in case some amount, some penalty, some interest, anything which we have just discussed, something is recoverable from the assessee, and the required amount that is required to be received, that is required to be paid by the assessee, that is not paid within the prescribed period, and let us suppose some rupees 1 lakh was receivable from the assessee, and the amount of rupees 1 lakh is unpaid, still unpaid, even after the notice it is unpaid, the assessee will be deemed to be assessee in default. And in that case, in addition to the amount already recoverable from that assessee and the amount of interest, some additional amount may also be there by way of penalty, uh, as the assessing officer may direct. So it should be noted. But two exceptions, my dear students, two exceptions are there, and these exceptions must also be kept in mind. Now, what are these two exceptions? First is, in case the matter is already under appeal, assessee has already made an appeal under section 246A. In that case, that would not be there, and for that amount, for that period, for that particular aspect, for that particular amount, the assessee can't be treated as assessee in default. Secondly, in case the amount is in relation to some country which prohibits any money remittance to India, there may be some provisions. There may be uh, some country with which such provisions are there. In which country such provisions are there that it prohibits money remittance to India. In that case also, assessee will not be treated as assessee in default. Now, one thing you should note, that in case it is clear, in case we find the TRO, tax recovery officer, assessing officer, we may say, ultimately when it is clear that something is recoverable from the assessee, in that case, the TRO, that is tax recovery officer, he will prepare, you may say, he will prepare a statement that is known as statement of arrears. In common language, it is known as certificate. He will prepare it, and in this certificate, in this statement of arrears, the amount of arrear recoverable, the amount of arrears due from the assessee will be specified in detail. So it should be kept in mind. Similarly, this notice, this certificate, this statement of arrears is basically sent to the assessee in default, so that so that he is able to know, so that he is in a position to know that what are the dues and all that. Now, interest and penalty. Again, my dear students, you should note that what is the rate of interest? What is the rate of interest in and for which period? For how many days the interest will be chargeable? So, dear students, kindly note, Income Tax Act is very clear regarding rate of interest. So kindly note that the rate of interest is simple interest at the rate of 1%. Simple interest at the rate of 1% for every month, for part of a month. For every month or part of a month comprised in the period. When it will start, it will be commencing from the day. Kindly listen carefully. It will start from the day immediately following the day of the 30 days. Now, what is 30 days? As I have already told you, that it is a period of notice. So from the end of 30 days, it will start. And let us suppose, in case when we have already talked that in case the assessing officer feels that it will be detrimental to the interest of revenue to increase that to provide 30 days period. In that case, even short a period of less than 30 days may be given with the approval of joint commissioner. So in that case, when let us suppose 20 days were given, 15 days were given. Then from the end of that period, that reduced period of time, and uh, we are computing basically interest, and up to which date, and it will end on the date when the actual payment of tax is made by the assessee. So from that period, from the end of the due date that was given, it may be 30 days or it may even be a period less than 30 days, to the amount, to the period, to the date when the actual payment was made. Now, one thing you should very carefully note that there is, as per the provisions of the Income Tax Act 1961, maximum ceiling on penalty has been fixed. Now, what is that maximum ceiling? That is, kindly note that the total amount of penalty shall not exceed the amount of tax in arrears. Let us suppose rupees 25,000, let us suppose rupees 30,000 was pending. That was the tax in arrears. Then the total amount of penalty can't exceed 30,000. 30,000, that was just assumed in the case. In case it is 50,000, tax in arrears is 50,000, then the total amount of penalty shall not exceed the amount of 50,000. Now, the major part of this chapter, kindly note, and it is very important, kindly note, in various grounds, on various you may say parts, it has been divided. Now I am starting with the first part, that is A part, and the sub parts are there in part A. Basically, three parts are there. Now, first of all, how to recover the amount. Now let us suppose you have sent the notice. You have already sent the notice. Assessee has received the notice. The notice has been served in a proper way, and assessee has also received it. But still he is not paying the amount. Now, what to do? What are the possible, you can say, remedies? What are the possible modes of recovery for the income tax department? So first is attachment and sale of assessee's movable or immovable property. Kindly note that in this case, in order to recover the amount, that is recover the amount of amount of tax in arrears or interest, penalty, fine, that is recoverable from assessee. For that, in case we know, in case we are clear, income tax department assessing officer is clear that some movable or immovable property is there, that is with the assessee. In that case, they may attach such property, and it may even be sold in order to recover the amount receivable from the amount recoverable from the assessee. Now, second part, it may also be there that assessee may be arrested. The second part is arrest of the assessee and his detention in prison. Assessee may be arrested and he may be detained in prison, and he is required to pay the amount. In this way also the money may be recovered. Now, third is, again, when assessee is having movable or immovable property, in that case, we may appoint a receiver. The assessing officer may arrange to appoint a receiver for the management of the assessee's movable and immovable properties, and the various, you may say, income, if any, that is there from such movable or immovable property, that may be arranged. As I have told you in the first point also, that the assessee's movable or immovable property may even be sold. In case such points are there, then what will happen in this point particularly? In case amount is recovered, then first of all, that amount will be utilized, that amount will be used to recover, to adjust the amount of tax in arrears for which we have initiated this procedure. Secondly, you may see that in case some other recovery of income tax department is pending against the assessee, even that recovery may be made from such amount. And in case, even after recovering each and every penny, each and every rupee that was recoverable from by income tax department from the said assessee. Even some surplus is there, so that will be refunded, that will be given, that will be handed over to the assessee. So it must be kept in mind. Now B category. Under the B category again we have 3 points. You see, in case some taxes area, some area of taxes you may say are there, and the assessee in this case, let us suppose that he is a salaried employee. Salaried employee is there, he is getting salary from the employer, and we know that for salary, employer-employee relationship is a must. In what the assessing officer can do in this case in order to recover the amount, the assessing officer may approach the employer and he may request, rather he may order the employer not to pay the salary to the concerned assessee by showing each and every aspect, by showing each and every notice, and by proving that something is recoverable by the department from the assessee, and by doing so, and employer in this case the employer will be required to kindly note, to first of all pay to the department, and in case some surplus is there, then in that case only the salary will be paid to the employee. So it is very important, and we may ask the employer to pay the amount payable by him to the assessee directly to the, first of all the employer should pay the amount to the taxation department. Now second, garnish order from the court. First of all, let us understand what is garnish order. You see, let us suppose A is our assessee and amount is recoverable from A, and he is not paying the amount. He has rather refused to pay, or he has shown his inability to pay the amount. Now, what to do? What the assessing officer can do in this case? In this case, garnish order from a court may be used. What is its meaning? That we have just assumed that A is our assessee. Now, say B is a person who has to pay rupees, you may say some amount, or you may let us suppose rupees 2 lakhs, rupees 2 lakh to the assessee, to A. In that case, now assessing officer will approach B and ask him through this order from the court not to pay to A, rather to pay that amount of 2 lakh, in case let us suppose amount recoverable is more than 2 lakh, to the income tax department. So it is very essential, and in this case B can't pay the amount of money to A, and rather he is required to pay the amount of money to income tax department only. And in case he says that he has no money, but after that it is found that he has paid money to A, in that case it will be his responsibility, and he will be treated that as if the money was recoverable from B only. So it is the importance of garnish order. Now, the movable property. Now, what is covered under movable property? It may be some vehicle, it may be some stock, or something like that. So it may be sold. It may be sold, and the amount will be recovered. Again, by doing so, first of all, the tax in arrear will be recovered, and in case some other dues are there, as far as income tax department is concerned, which is recoverable from this assessee under any other case, so that recovery will also be made. And after that, after recovering all the amount, in case something is still there, some surplus is still there, so that would be refunded to the assessee. Now, under C category, what can we do? Under C category, the recovery can be made through state government. And kindly note that the provisions are given under section 227 of the Income Tax Act 1961, and under this amount, the amount of tax due from the assessee will be recoverable in the same way as the land revenue is collected from the defaulter. Now, a D point, that is basically in pursuance of agreement with foreign countries. Section 228A deals with that. Kindly note, in case amount is recoverable from some assessee, and let us suppose we come to know the assessee or assessing officer uh, comes to know that some property or some source of income the assessee is having some in some foreign country. So in that case, by government through government, the assessing officer may approach that country and he may show the taxation authorities in that country regarding the money recoverable from that fellow in India, and he may be and the taxation authorities in other country may be asked to recover the amount by selling the properties that the assessee is having in that country and send the money and remit the money to Indian government. And even foreign countries may also, in case amount is recoverable by them, and they found that some property assessee is having in India, so they may also approach Indian tax authorities, and this thing may follow. And it is there basically. It is no doubt it is not so simple. Various legal formalities are there. It is very complex and cumbersome, but still it is there. The provision is there, and by doing so, by moving in a different direction, uh, the recovery may be made. So last is by suit. By suit, that is by in simple language we say by moving a case against the assessee in the civil court or any other law. So by way of moving to court, by way of filing a case in the court of law, even then recovery may be made under section 232 of the Income Tax Act 1961. One thing more, you should note that authorities like Principal Chief Commissioner, Chief Commissioner, Principal Commissioner, or Commissioner of Income Tax may are there. These authorities are empowered to reduce or even waive the amount of interest paid or payable by the assessee. In case, such officers, such authorities satisfied that a few categories are there that the payment of interest will cause undue hardship to the assessee. In that case, it is not that it is compulsory. It is not compulsory, but they may. The word used is may. It is not that they must reduce or they must waive. They may, in case they think that it will cause undue hardship to the assessee, and why such assessee should suffer so much of hardship. In that case, they are free to reduce or waive the amount. Now, in case they are satisfied, in case such authorities are satisfied, any one authority is needed. As I have already told you, chief commissioners, principal chief commissioner, principal commissioner, or even commissioner of income tax. That assessee was very much interested to pay the amount, but the assessee couldn't pay the amount due to some circumstances that were not within the control of the assessee, rather that were beyond the control of the assessee. In that case also, such authorities may waive or such authorities may reduce the amount of interest paid or payable by the assessee. Now, third case, last category. In case some inquiry was there, in case some proceeding is, as we know, some proceeding is already going on, and proceeding of recovery of amount, and assessee is fully cooperating. Full cooperation is there from assessee, and even you see, you in common language, in life also, we know that when someone is fully cooperating with you, then some soft corner is automatically there. Similarly, in this case, when they think that we are receiving the assessee in default is fully cooperating with us in inquiry, in proceedings, then in that case also they are empowered to reduce or even waive off the amount of interest paid or payable by the assessee. Again, you should note that the order accepting or rejecting the application of the assessee is required to be passed within a period of 12 months, literally 1 year from the date of the month in which the application is received. And in case the application is accepted, then it is okay. But in case the application is not accepted, then the assessee must be given an opportunity of being heard before his application is rejected. So, with this, dear students, this chapter is over. I think we have already covered. I have tried my best to make you aware regarding various provisions of collection and recovery of tax as per the Income Tax Act 1961. Okay, thank you.